All right, so what's shaking, everyone? All right, so let's get down and dirty, as they say. Hold on. Let me keep your questions up so I see what the hell you guys are talking about. For anybody who's new, welcome to the Degenerates Club. Being honest with yourself is a big first step. Hold on. Okay. All right, so we could keep it short today, all right, and just focus on the important stuff, so we don't clog our brains with too much nonsense. A lot of noise out there already working on that for us, all right. And I like every webinar, right? We start off. I like to go backwards and start from there, okay, and then lead up to where we are now, just so you could get an idea of what we were looking at if you weren't around, and why we're looking for what we're looking for going forward. All right, so yeah, these trend lines really are pretty useless, but I wouldn't say useless. These are the two most important, just to get an idea. You could see it without the lines there. All right. So again, I know it gets repetitive, but you got to understand, we have new members, people who aren't members and all that, so they got to understand where we're coming from. And honestly, repetition is a good thing in this game. You keep looking at the same stuff, you keep focusing on the same stuff, you keep talking about the same stuff, and it becomes habit forming, Exactly. So I apologize if it does sound repetitious at times, but that's my goal here. And I'm going to start off the same way. All right. Once we had bullish extreme up here, right? Actually, for a while up here, wondering when the shake will come. Okay. Nobody knows exactly when, but that's where sentiment provides an edge or a reminder, even more well put that way, a reminder that the likelihood or the odds of a drawdown have gone up dramatically when everybody's feeling bullish, right? And we're starting to see signs of bulls getting sloppy in positioning. So we finally get it. Now, what was interesting about this pull was that it happened so quick. The power behind it, the velocity, the magnitude behind it, and the noise behind it, that it did a lot of good, meaning it shook out a lot of sloppy bulls who were too overexposed into the highs, okay, and reeled in a good number of bears, right? We've been talking about that, since that week it occurred, and we've been talking about that throughout all the way up on, for you, those of you who remember Sunday's webinar. And basically, looking at a lot of the sentiment readings we look at on a day-to-day, week-to-week basis, we came to the conclusion that there was enough damage done, okay, on a sentiment front that the likelihood, or I guess, again, forget the likelihood, the odds and the probability were that the lows will hold, okay, and more importantly, there should be squeezes, rallies, dip buying, whatever label you want to put on it. All right. But when sentiment reaches extremes, right, when you get bearish extreme sentiment, if I could speak today, I'm tongue-tied, the odds go up that the smart money is going to come in, and they want to own that, right? They want to be long of that. When the whole retail crowd is nervous, fearful, scared, doesn't necessarily mean the market's going to rally to new highs because of that, but the odds go up dramatically that the dips, the pullbacks should get bought. And it's not only in correction, guys, not to jump around, but if you remember, we were talking about the same thing early on in the rally, right? how the retail crowd, most of the crowd out there, we called them the non-believers. They were shorting into the rally, right? They thought it was a bear market rally. It was an entry for a short to new lows. They were looking for a double bottom scenario where we would test lows. And all throughout the rally, we had sentiment on our side. And what happened? Every little dip got bought. Okay, so it's not just in corrections that works. It works no matter what the climate or the probability of it working goes up. Okay, so that's the conclusion we came to off of that initial drawdown here. Okay, and from my experience, especially when the flow's not there, okay, and that's basically the only other tool I have to measure the buying out there. Okay, because otherwise I have no idea. But if the flow's not there, if we're not seeing them aggressively start to get long risk type names, you go into this sideways chop scenario, right? So you get a squeeze. So anybody who puked up, all the longs who puked up into the lows, they made the wrong move. Shorts get squeezed. The bears that short into the hole, they get squeezed. And even though there's not really a huge amount of buying going on, you have the squeeze, right? Shorts getting squeezed that add fuel to the fire and create some nice rallies. All right. And you get that, right? And then you get a little more weakness off that. Bears start believing, okay, this is going to be the big one. They get squeezed, right? Then you get bulls thinking, oh, wow, things aren't that bad. Right, so they flip, they get shaken out, and you get this sideways chop that really frustrates both sides, okay? But more importantly, my takeaway is the most important thing, okay, that even if we're in a full-fledged bear market, right, the worst of markets we could possibly be in, the likelihood is they're going to do something like this before things spill over. Okay, and the reason why is all the bears that piled in, okay, into these couple of days here, where it was basically you could have thrown a dart and things were going lower, right? Everything was puking, all right? So all the late to the party shorts who wanted to make some easy money on the short side, those guys they're not going to pay those guys. You know what I mean? So if the market was going to completely unravel from here, okay, and you got put the calls and all that sentiment stuff, at an extreme, those guys are going to have to get paid if there's going to be another, decent sized leg lower. And the odds of that are slim to none. All right, so what you have is you get something like this, okay, that really wears them out. All right, so maybe they get shaken out off this rally, they come back here looking for the move. Okay, this one's going to do it, right? They get shaken out again. All right, this one's going to do it. And then eventually, they give up for the time being, right? They give up. Now, I'm not saying every bear gives up, okay? I'm talking about the crowd. It's about the crowd, right? Sentiment's only important at extremes. Otherwise, when there's no signal, there's no signal. It doesn't tell us a thing. But at extreme is where the edge is. All right. So all in all, and this is, I think, the beauty of it, because this has played out perfectly. It doesn't mean it's easy to make money. Okay. It's one thing to have a game plan, and it's one thing for things to work out, perfectly each and every day for you to profit off it. That's a whole different can of worms. But this is exactly what we were expecting. Okay, this is exactly what we were expecting off this pull based off sentiment from what we were seeing. All right, and the playbook, right? Once we have an idea of what edge we have, what is the highest probability, what are the highest odds of playing out, right? The playbook for that is we want to be buyers off the pulls when the bears are getting revved up and bulls are losing faith, right? So when we start to see short-term sentiment signals start to flash green, meaning bearish extreme, that's where we want to be tactical and play for exactly what's been taking place. All right. So the point I just made, that it's easier said than done, I'll give you an example. Okay. Here, right, even though in the playbook I was early and barely made a profit, it was a scratch on the squeeze where I ended up getting out. Okay. This one here was so far the best spot to me because it just happened to nail the lows. We had that day of where we could buy right here and, you know, caught a nice squeeze. Okay. So far here, right? Those of you who are members know they jumped us. That following day that we wanted to come in and do some buying, the market went from down 35 handles on ES to gap up. All right. So they screwed it up for us. All right. So I'm just making the point that even when you have a plan and a playbook in place, it's not as easy as, you know, just sitting back and things are going to fall on your lap, especially the way the market is now. Forget it. You know, the key though is to stick with it and not let and allow every little thing throw you off your game and throw you for a loop. You know, just because they jumped you and they gapped up the market a day before you were probably going to come in and put on some longs doesn't mean you should just go out and chase the highs when you had no intentions of doing that. That's not in the playbook. You know what I mean? That was nowhere even. The one thing to avoid what we were talking about in the playbook was to buy this, right? If you can do one thing, forget about getting long where we want to. If you could do one thing, just avoid buying this when everything's probably at its most bullish setup scenario. Okay, that's where you want to avoid getting trapped and getting long. All right, but you can't let, you know, missed opportunities turn into, all right, I'm going to do this instead. I'm going to do this and that. And the other thing too is, you know, even though I see it every day, even though you have a plan in place, right, and you're waiting for that setup, right, you're trying to be disciplined, wait for that setup, you're dealing with the ongoing distractions and noise every single day, whether it's CNBC, whether it's other traders you're around, whether it's Twitter, right? Everybody has an opinion of what's going to happen, everybody. It's rare to find somebody who doesn't have an opinion on what the market's going to do. And the truth of the matter is, the likelihood is nobody does have a clue. All right. But when you get wrapped up and you have that emotion wrapped up into it, you end up developing that bias, right? Because you think you know more than the average guy out there. That's where things can get thrown off course. Whatever plan or whatever playbook, you know, even if it's not this one. All right, but that's the advantage and that's the edge of, you know, anything, flow, sentiment, and having a plan in place. There's no good if you have a plan in place and you're going to deviate from it the first day, your plan doesn't spit out an opportunity. You know, and just think of that logically. It's foolish, right? It's just foolish. So, and the degenerate in us, right? We want the action. We want the action. Even though we know that these spots are the best risk reward spots, right? And you should be okay losing money if you lose them at these spots because the odds are in your corner. More than not, you're going to make money, right? That's why it's the playbook. But, you know, you get, again, sidetracked. You see a name that's moving that you were looking at last year and it's starting to move now, and you got to own it. And sentiment goes out the window and everything else goes out the window, you know. But guys, it all comes down to, anyway, I mean, how serious about this game you are, you know. If it's something where you're determined to find success and make some money, then there's certain things you really have to iron out and you really have to pay attention to, you know. You really have to take action and put things in place. Otherwise, you just spin your wheels. But if you're in this game for just entertainment purposes, you want to make some money, but you're in it just because you love to play it, and the money would be a bonus, it's not easy, you know. It's not easy to stay disciplined with that mindset. So no matter what anybody tells you, it's all about you. But one thing you will learn, and one thing I try to preach to you guys, right? I don't tell anybody how to trade or anything like that. When it comes to both flow and sentiment, there are sweet spot setups, okay, where the odds are in your favor and the risk reward is best in your favor in that spot. All right, and it's the ability to hang around, right? Entertain yourself, do things at a minimal, or if you can sit on your hands and do nothing, even better, to allow that to set up. All right, but and there's nothing wrong with, like, I'll give you an example, okay? Just again, I can tell you what I do. So what I do, right? This is all I've been doing now in this whole corrective phase we're in, right? It hasn't changed since day one. You guys know that, all right? My swings, right? Anything I'm swinging, especially call side, is going to come off these setups. I'm not swinging anything up here. I'm not swinging anything over here. I'm not swinging anything over here. I'm not swinging anything over here. I have to have sentiment on my side in order for it to be worth my while for me to take a swing. Otherwise, I'm not interested. What am I going to do? I'm going to miss the one winner in this market? You know, chances are you're better off missing all of them. So that's my swing plan, period. There's no overthinking that. That's it. It's written in stone, okay? What am I doing in the meantime, right? Because that's just as important. While I'm waiting for these setups, if and when they come, strictly day trading. Strictly day trading equity, okay? I'm not going to get rich. Right? I'm not it's coming on here saying I'm going to get rich scalping intraday, right? But I have control. I can stop myself out if I don't like the way things look. I'm in the equity. It's nice and clean. It's easy, right? But that's just me. Again, there's a million things you could do. You could size down dramatically. You could do a lot of different things to avoid getting hurt, okay? But if I find a way to make some money while I'm waiting for those swing setups, it's a beautiful thing, right? If I can grind it out and make a little bit of money day trading and wait for that sentiment setup for a swing, that's the best of both worlds to me. I'm not trying to go outside my box, right? I'm not trying because this thing didn't allow me the window to get in for this trade, which I wanted so bad. I didn't come in this morning, you know, looking for swings into the green with sentiment not on my side anymore. What's my plan? Wait, let them set it all up again, you know? Let them set it all up again. All right, because again, it's having confidence, I guess, in your edge. I think that's what it ultimately comes down to, right? Because for me, here's the thing for me. If sweepers don't come in, right? We've been talking about this since we're going to turn purple in the face talking about it. But if I don't see flow absolutely explode, for me, this can go on until that happens. And I'm not, I have no FOMO, or I'm not worried about a rally that's going to get away from me without sweepers allowing me to take advantage of that. Now that's not to say there may be an up move over the short term that I'm not participating in. Here's one right here where I didn't participate in, right? But the way I'm looking at it, all right, maybe I can day trade and make some money in the meantime while I wait for it to set up again. So I'm not getting out of my box. I'm not trying to do things that I'm not familiar with, or I don't have, I'm not comfortable with or confident in. I'm sticking, again, the best way for me to do it is sticking with the playbook. So, and I told you guys, what ultimately happens from my experience, and I'm talking just strictly out of sweeper activity and sentiment, okay? One of the sides ends up getting worn out, okay? So at some point, right, let's say this ends up selling off and boop, you break, right? The likelihood is at some point, we don't know exactly when, we don't know what sentiment's going to be like prior to that, but there's going to be an extreme bearish signal, which would be bullish for us, off that selling, and would set up another thing like this again, okay? Or sweepers, which are aggressive buyers, for anybody who doesn't know what the hell that is, but sweepers will get really aggressive, extremely aggressive, show some size for a change because they haven't showed any size whatsoever out there, okay? So buyers in simple English will get really aggressive to where, I'm going to look throughout the day and I'm going to want to own something. I can't wait for that down day to buy XYZ. Or luckily today was a down day, so that missile into, whatever, pizza, I have to own this thing today. So one of the two happen, right? If the flow never becomes impressive, this continues to be my playbook until ultimately we end up reaching that bottom. Does that make sense? Anybody confused by that? Because I get questions of people they're looking at things a little bit the wrong way sometimes, and that's how you can get in trouble. But does the playbook make sense to you guys? Just the theory of it in general? I'm sure a lot of you guys get in trouble when you get outside your box, right? But just a yes or no, if you can. Do most of you on this webinar right now, if I put a gun to your head right here, do you have a specific trade or setup, right, that you feel most confident in, that you feel good about? And I already see tons of yeses, right? All right, we got some no's, and that's fine if you have no's, because eventually you will find a yes to something like that. It may be rare, right, and the difficulty would be waiting around for it, but you're going to find, more than one of those. It's just like somebody just mentioned, waiting around for that stuff. So that's what should be your goal, and especially if in this type of climate right now, you're getting, as the retail saying goes, chopped up, right? You get thrown around, you're spinning your wheels. Like I see a couple of people, even in the steam room, oh yeah, it was a rough week, spinning my wheels. So what did you do exactly, right? What did you do that you're getting chopped up or you took a beating this week, right? And then when you figure out what you did, is that something you should have been doing, right? So I'm using the example, you're a member of the steam room. If you're following sentiment and you're following sweeper activity, were those signals there that you should have got aggressive up here off a rally? And listen, you don't beat yourself up. If the answer is no, which it likely is, that should be your goal. That's what you have to work on to get better at this game. That's what you have to work on to get better at this game. And trust me, guys, I'm not saying it's easy, especially when you got a million different people around you now with social media and everything else, spitting out different things. You see different opportunities, tons of opportunities throughout the day. It's not an easy thing. But any form of gambling, that's, you have to iron that out if net you want to be a winner. Any form of gambling, not just stocks, options, bowl games, horses, any gambling. If you don't iron out some sort of guide, some sort of playbook of what you need to do and what not to do, and when you do something you shouldn't do, work on not doing it again, it's only a matter of time before eventually it's going to bite you in the ass a little too much. So that's why I'm not trying to preach to anybody. You guys know me. When it comes to trading, I have no business preaching to anybody because I don't consider myself, much of a trader, period. But just in gambling, if you want to be profitable, there are certain things, money management, discipline that you have to apply, and you have to do it. There's no choice. You don't get away with it. You may get away with it now, but you won't get away with it long. And that may be, I spoke to a couple of people, when was it? Last weekend, who said they've come to the conclusion, you know what they said? And I totally understand it, that instead of the playbook that I'm discussing here, they'd rather just not play. You understand? They rather just move to the sidelines, build a watch list, and they're waiting for that flow that I just mentioned. So instead of trying to make some money out of this period, okay, they're waiting for the light at the end of the tunnel. It's going to come, a matter of when. It always comes. Some take longer, some are shorter, right? We never know when, but it comes. So in other words, instead of trying to get through this by trading, just if you can, again, I'm just giving you an example of what other people are doing. Move to the sidelines and, come every day, build a watch list, watch the price action. You got to get over, if you're not playing, if you're not gambling, if you're not trading, that you can't watch the market. You have to get over that. If you can't get over that, you got headaches. All right? That's like a degenerate gambler saying, well, I can't watch a bowl game. If I put on the bowl game, I got to have money on it. What do you think is going to happen to that guy? He's going to lose his lungs. No? He can't watch a bowl game unless he has money on it? That's the same thing saying, if I'm not going to trade, then I'm going on vacation. What do you mean? I don't understand that. Every time you come into work, you're going to trade? You think you're going to find a trade just because you came into work? You're dead. So it's the same thing. It's the same thing. But I'm just giving you the point. Like, a lot of people sidestep this. And I told you, when I was a broker and I had to manage money, I couldn't be as nimble. That's what I did. That's what I did. I don't care. That's what I did. I got clients into cash, as much cash as possible. And I sat and I waited and I waited and I waited. Even if I'm not talking about nailing lows, and then we're going to get into that can of worms. What's the low and what's the not low? But you just wait for a better environment, right? Volatility comes in. You see more flow. You see follow through on names. You see names starting to break out and work out in packs, right? You see healthy signs. You don't see what we're seeing now or what we were seeing in October. Those things come to an end. So that's definitely an option as well. But you have to figure that, that's what my point is. You have to figure that out. All right. You have to figure out what you need to do to get through corrections. All right. For me, this is what I found. This is what I found. And I'll tell you, like, corrections, I do okay in corrections because I have a seatbelt. You know what I mean? It's like if I'm just looking at sweeper activity and sentiment, that's my seatbelt to not doing anything else. So like I said, I'm not going to swing. I'm not going to swing XYZ just because I have a hunch on my own or did some research on my own without sentiment and some sort of sweeper activity involved. So that's kind of my seatbelt for not getting into trouble because I'm only buying, right, with bullish sentiment. I'm on my side. And if there's impressive sweeper activity in the name, which in corrections is limited. That's what a correction is. But you have to find some sort of seatbelt. You can't force it because you can see what happens. And if you think I'm a conspiracy theorist, and anybody who's been trading long enough will tell you, you don't think this is purposely done to do that? You don't think this price action is doing this for the sole purpose to shake out enough of one side or the other before a major move? That's how markets work. That's exactly how markets work. All right. So again, here's the playbook from sentiment and flow, and you guys apply it to the way you guys play the game. What we're looking at now going forward, right? The past is the past. We'll see where we end up. I'm hoping sentiment's right there when it updates tonight. And any little pull, right, to the lower end of this range, if we get a signal, that's where we're looking for an entry and for the same thing. Guys, what's going to happen sooner than later now at this where we're at here? If we hover around here long enough with all the noise out there, we're going to get some bigger sentiment signals in our favor. In other words, when you linger, right, when a rally can't develop out of here and you're testing lows, right, and you have that volatility, you see even now, right, we know that we're in a range, but you see what the down moves feel like? You feel it, right? You feel like even though you pull up a chart and you're like, oh, we're still in the range, it feels like the market's completely falling apart. But we're just in the same exact, in the same exact price action pattern here. So what happens though is even though you're not necessarily going lower in price, okay, sentiment really gets washed out. Okay, the longer you linger around there. All right. And then eventually what happens is you get less bulls exposed, right? Less positioning on the bullish side, more bears trying to go for that big break. And that ultimately will set up what we label an intermediate term bottom. And that's where usually you see a huge uptick in flow. And it doesn't necessarily mean a whole new leg higher, a whole new bull market higher, but a low to trade off of where there'll be names outperforming within that price action. So it's more than just a tradable range. It's more than just this range here. It's got an upward bias to it, but even more so in individual names and sectors. So at the least, like for example, it depends on the pull. I'm talking about like December, right? Where, you get sentiment signals that haven't been there since 2008 flashing into the lows, right? So at the least, there's going to be some decent rally, more so with time than even how much or how far, right? This ended up being a monster, obviously, or even this one here, right? Same thing off that panic attack. So that ultimately, it's either that comes about the longer we hang out here, or if they're going to take this market down, right? You're going to get, the likelihood is you're going to get that squeeze like we've had over the last couple of days where they get bears, they run over some bears, they get them out of the way, and then you get that velocity to the downside. Bink, bink, you know, where it happens quick. Where if you're not in it already, it's almost like you couldn't even get involved in it if you wanted to short something and make a score. And then ultimately that will set up a bottom. You know what I mean? So one or the other, we're closer to one or the other here, in my opinion. You know, we're closer than obviously we were at the start of this. We were. And, you know, if there is another leg lower, we spoke about this. A lot of times, if this, you know, if there's a big break, this one's going to be a big one. This one's going to be a big one. But I'm telling you, there can't be bears involved in this. So they're going to really have to shake out bears for this to happen. It's possible, but it's not going to be easy because people get bared up quick. You know, people get bared up quick. So we'll see what happens. We'll see what happens. And again, for those of you, yeah, exactly. For those of you who are members, I think the flow tells the whole story. I know it gets difficult, like trying to find ideas to even actively trade right now and stuff like that. But as far as big picture is concerned, I think the flow tells the whole story. I really do. Like when you take a step back, and if we were seeing right now quality activity coming in, you know, I would have a lot of confidence right now that not only that whole new leg lower likelihood is not going to happen, that these lows are going to hold. You know, because again, the smarter money out there is getting aggressive. They're always the first ones in. But we're not seeing that. We're not even seeing them start to position in names early where they're wrong early and they have the intentions to be early. You know, where they start picking up names and on the way down, they continue to add. So if you ask me, is that, you know, necessarily, is that a bearish sign? I wouldn't say bearish, it's a cautious sign, okay? Because what could happen though, what I've seen happen, I've seen that flow exist and a market continue to do nothing, right? The upside is limited when you see that type of action from my experience. But out of nowhere, that flip switch, you know, they flip the switch. Don't let me start getting into Bazooka Joe on you guys, right, in 2016, all right, because that's a great example of it. You know, flow was awful. Flow was awful. Those of you in the steam room, okay, you don't even realize I was the lone bull left in the steam room at that time. There wasn't a bull to be found in 2016. That's how bad, forget about price action, that's how bad the flow was. Okay, and when we least expected it, the market was dripping right here. Okay, so figure like this, right? You get drip, drip, and then as soon as it pierced the lows there, okay, oil plummeting, everything, you know, off no significant news. There was an OPEC rumor that got shot down, okay, but the buying that came in, as I've told you guys numerous times now, you know, it made your head spin. It made your head spin. You know, so out of nowhere that happened, right? It took one day. Flow was miserable the whole way down and chop and sideways and down. And then from that point on, it was clear sailing. I see people talking oil. What happened? Big move in crude from the inventory numbers? Let me get to what the hell's the real-time crude thing on this freaking thing. I think it's an X. Hold on, I'll flip it on here for you guys. X. That's not it. Damn it. Why do they got to confuse me for? Crude. Something with an X or something, I remember. What's the trading view? Oh, QM. My bad. I got it. So this is off inventory numbers here? QM. Interesting, huh? ES following? Not really, right? Just crude. And crude had a good day today. I didn't even realize crude had a good day today. All right. So that's why, guys, it doesn't be, yeah, a lot of those oil bets in the afternoon. What were they? XOP, that big USO block, right? Wasn't it a block, though? XOP, there was $1 million sweep or something. Let me check those out. Wow. People getting oiled up is right. Let's see here. There was a good looking XOP. Yep, this is it. Look. This was 720 grand. There was another one bigger than this too, wasn't it? Oh no, that might have been it. Yeah, this was the ones that came in late. Interesting. Freaking oil. What's the oil stocks will probably be down. Ba, ba, da, ba, ba. Knowing the oil stocks. They'll probably be down off the move. All right? But no, all kidding aside, guys, what I'm saying is it doesn't pay. Be careful on the bear side is all I gotta say. All right, be careful. All right, no matter what you're hearing, let the market. If the market's gonna crash, it's even better. It ends even that much more quicker. All right, but you gotta be careful about. If the signals aren't there, the signals aren't there. You have my blessing to be as bearish as you can possibly be. Be the best bear you can be. But what I'm saying is, once you build a bias and it lingers, okay, and you take your guard down, and then when those signals come and you built such a bias that now you don't want to believe those signals, they're going to knock you out so quick you're not going to know what hit you. You're not going to know what hit you. Guys, 2016, the whole entire chat room was as bearish as you will ever see it. Will ever see it. And Bazooka Joe came into extreme bearish sentiment. Okay? I'm talking about bottoming signals sentiment. And they didn't want to know a thing. They didn't want to know it. They couldn't care less because of how bearish, things were up to that point, and they were finding success making money on the short side, It's, yeah, Norse, it shuts you down. It really does. It shuts you down. It's different like bulls. I don't know if bulls are the same way. Maybe some bulls are. But, bulls, once they sense uneasiness, I don't know. I've never been around too many stubborn bulls, Bears can be stubborn. Bears can be stubborn. Yeah, that's a good point. I mean, the whole Trump presidency, basically, look what it did to them, right? Look what it did to them. You're right. But yeah, so as of now, though, I don't see anything, as we call it, I don't see a thing to get us off the playbook here. I tell you what I want. I was telling you, Joey, the other day, I'm hoping for the next step anyway. We start to see commitment behind select names with time, even though it's not going to help with the market momentum wise. It's not going to mean anything for that name over the short term. But I want to start positioning in some names, that I have some times on the calls, some time behind the calls. So that's what I'm hoping for will start up at some point here. We could be seeing the initial stages of that. There's some flow out there. They're buying some stuff. They're just the commitment part, the confidence part is not there yet. It's just not there yet. Like we're seeing, the aggressive activity we're seeing where we're seeing it, right? They come after, they scramble for Yelp weeklies that they're flipping into the bell today. They were closing some of those Yelp today. I don't know if they rolled, but they were closing them into the close, or AMD, right? Like AMD, when they come after AMD, they come with missiles. This go around, what do? They come after 25-cent weekly lottos. And listen, it's okay, right? If you're buying those at or near the right spot, it's okay. But it's not the flow you want to see that's giving us a heads up that we're coming out of this. You're going to see it explode, even if they're not multi-million-dollar orders in select names like 2016. They could be like coming out of December, where they just hit everything in its mother. Remember last year, December, we were talking about Bazooka Joe coming. Bazooka Joe didn't come up. There wasn't like a group of names that caught huge orders. They bought everything. They bought everything. I remember like the top bet list at the end of the day was 5 pages deep. That's how much action there was. So that's those are the signs you want to see. You see, like Joey, you love that flow. You were talking about that IWM bet yesterday. You're going to see 5, 6 of those, right? Throughout the day or over the course of a couple of days. Not one, and then you never see it again. Like you guys remember, remember the ETF action that was coming into the rally? You guys remember what the hell they were doing there? Tattooing things, even on the way up. There's big money thrown around. They're not buying 10-cent weeklies and piling up 10,000 of them. That's pica stuff. That's pica stuff. When they want to get long, they're using the option market as leverage for added exposure to their equity positions already. That's what they're doing when the big boys do real buying, not spec buying, as we call it, So that's the difference, Moon, between what we're seeing now and aggressive activity. Aggressive activity is when they don't care what the market's doing, what the stock is doing. They just keep buying. You understand? They just keep buying. So you'll see them buy SPY and the market will roll over and go lower. And then boom, 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 you see another couple of $1 million in SPY calls, right? Market bounces a little and then runs out of steam because the selling's too strong. And then they come in again and bang SPY. Relentless. Relentless. Or they pound VXX puts till there's no tomorrow. Slam it into the ground. It's that relentless. That's where the word aggressive comes from. It doesn't stop. It gives you the impression that they can't own enough of it. They can't own enough of it. That's what it comes across as, especially out of corrections, out of corrective phases, because why? Things are cheaper, right? As far as their entries on names and the market's concerned, and cash is raised. They raised a lot of cash. So now they can put big cash to work. New positions. Yeah, but those stocks, that's, you know what I'm talking about? You're talking about a handful of names that have been, you know, that haven't corrected. They're piling into them until the music stops, type of thing. You know, this is not healthy. When you have this looking like this, and you have, you know, 3,000 names looking like this, that's not healthy. Yeah, that's the last thing you're going to see out of a bull market. A whole, you know, the start of a rally. You know, you hear the word breadth thrown around a lot. You know, it's broad. You know, they want to buy stuff because it's cheap. It got whacked. They're not piling into shop because it's the only thing left tied to the American consumer and they're scared shitless of anything else. You know, that's not healthy. You know, there's a great chart I post that tells the whole story. I don't know if you guys saw it. I posted it, I think, both in my room and on private Twitter and my personal Twitter. But this one here, watch this. This tells the whole story of what's going on here. As far as what's going on right now, Moon, on the buy side, okay, they call this the buy-sell ratio, measuring buyers and sellers throughout the day. Okay, look at this. This was the Christmas, New Year's Eve, Christmas bottom, right? Look at this. Okay, buyers to sellers. You know, and look where we are now. You know, which is normal in a correction. But you know, you're going to see, you know, coming out of corrections, you see things like this. Right? The excitement, the aggressiveness, the relentless buying, people getting squeezed, gamma at play, everything, the whole works now these days. You can't hide this. This you can't hide. This doesn't sneak in. You know, we with the a lot of times with sweeper activity and flow, you can get a heads up possibly that this is coming. But as this is happening, it's not like you need a special eye to see it. And like I said, we're gonna, as far as ideas, you know, what you want to own, this and that, you're gonna have a plethora of them coming out of a correction. A ton of them. They bomb things. Yeah, you really don't, Tim. You know, it's pretty obvious. Again, it doesn't mean you're gonna catch the bottom when it's obvious, but you don't need to. You don't need to. You just can't have that bearish bias that we were talking about and be blind to it. That's the problem. That's what happened here, right? Think about this, okay? Look, this went on off the December bottom, and how many were non-believers? We were talking about that the whole rally, remember? Nobody wanted to play that rally. Nobody on the retail side wanted to be involved in that rally. While this was going on right here, you're seeing this. This is an explosion. Look at off the May lows, off that May pullback, you know, the buying interest, right? A little bit of a rise. Look at the out of the correction though. And people still didn't want to be involved. So, you know, that's the light at the end of the tunnel right here. If you're a swing trader, things are a little too difficult. You can't be as disciplined. You can't be as quick, right? You have other things going on. You can't wait for sentiment signals and then get in and then get out for the squeeze and then wait. This is what you're waiting for then. Okay? You come in every day, you watch the flow, good or bad. You see some names you may have an interest in that are on sale off a pullback. And you're waiting for this to develop and you're ready when it comes. And then it'll be worth your while. All that sitting on the sidelines, you made all your money there anyway. That's where most people on the long side make their money anyhow, is that uptrend there. That's where all the money's made. You know, that's where all the money's made. So that's the light at the end of the tunnel, that, you know, we can't see it right now with everything going on, but at some point it'll be here. You know, at some point it'll be here. We got that guy from Numora. You guys saw that article talking about a crash imminently. I hope it happens. I hope it happens. Let it happen. The quicker the better. This guy, yeah. It's not McElliott. It's somebody else. Yeah, that's it. Takeda or something like that. Where is he? Here he is. Where? That's not him. What'd I do with it? This guy. Lehman-like plunge. He's talking about, what's he saying now, C-Train? Like really short term, no? This week? What do you mean, the week we're in? Oh, this week or early next week? Interesting. Bold call. Yeah. So, you know, I mean, anything's possible. Anything's possible. Like I said, if we had flow where it needs to be, I wouldn't even be looking at the article. But you don't mind a crash. Let it happen. You know, let it happen. And that's why in the meantime, you know, we stick to the playbook. You know, we stick to the playbook. Nice and easy. Play at certain spots for a squeeze, right? Don't overextend yourself. You lose a little money, you lose a little money. But when that sweet spot entry shows up, you're able to participate. You're not negged out and you're not out of money. Yeah, an 87 style, you know, it's funny. You would think we get one of these 87 styles, right? At some point with, right, a flash crash type thing. We're due for one of those. You know, we're due for one of those. But like I said, the likelihood is they're gonna squeeze bears before it happens. And right now they could do it right now, right? They could have done it today, yesterday. They shook out bears. By the way, again today, a couple of you guys in the room gave me a heads up on it. In other words, I was looking at it anyway, but I appreciate the heads up all the time, just in case I'm distracted on the put the calls today. But you can see why it's worth keeping an eye on this stuff, even intraday, right? I mean, look at today, for example, what it allowed you to sidestep. All right, so this chart doesn't do much justice, but you'll get the point, okay? This was the open here, right? Yeah, okay, so you had the open, and then off the open, a lot of times during rallies, you'll see this anyway, but like I told Tonis and a couple of you guys who were looking at it, you got to, by 10 o'clock, if you don't see things starting to even out by 10 o'clock, then you start to take it a little more serious because, you know, off the open, there's not enough sample size there. But you had a drop in the put the call to, you know, pretty low levels. Okay, the equity put the call, I don't even know exactly what put the call this is on here, but anyway, you had the total put the call down to like a 7. All right, and you know that told you that here, yeah, maybe the rally could have extended a bit, but you got a lot of bulls involved there. You know, so if you're worried about these fades, crashes, flash crashes, that's what you want to try to avoid on the long side, right? High squeezometer, dropping a significant drop in the put the call, you want to sidestep that stuff. Doesn't mean you have to short it, but you want to sidestep that side. You want to at least have stops in place if you're long. You want to be aware of it. And I mean, is this coincidence now? I mean, come on, you right? This is not coincidence anymore, guys. It happens a lot. There's the drop, stays down here, right? No elevation, and this thing just goes south, right? And then eventually, what's this do? Creeps right back to normal. Almost a mirror image of what we went over last week. Remember last week? We thought the market was going to come in. It wouldn't come in because people were playing for it. And then once they gave up, then it came in right here. Right? So here, the day before, I was talking, Lewis in the room and all of us, we were thinking maybe the market would start selling off here. We wanted it to anyway into the close, okay? But, you had to put the call, look where it was. 1-4. So that told you that tactical bears were looking, right? We're staying in puts for the short. What happened? As soon as they gave up on it, right where that circle is, what happens? Come on. You could call me nuts. It's coincidence. You could whatever you want to call me is fine. But I've seen it way too much. May not be all the time, but way too much. Way too much. Yes, I agree, C-Train, and many agree that C-Train is saying that they're programmed, right? Algos, machines are programmed to trade off headlines and info like this. That's a lot of the reason why sentiment works a lot of times. A 6+, but your number was in a 5 handle. What's a 6+? No, this is not, I think this is a total put the call, but it doesn't always line up numerically with my other total put the call that I get off Trade Alert. You know what I mean, Ani? So, I try not to get too hung up on the numbers, give or take. But the premise. You know what I mean? You know what we're looking for. And if you're unsure, always ask. I could always confirm it. You know what I mean? If you're not sure about any numbers. Yeah, exactly. If you see, it coming in like this, they could catch bulls, right? If you see it elevated, they got bears. I mean, that's basically what we're looking for. It's just remarkable the timing of it, though, right? As soon as this dropped out, then the market rolled over. Like, look at how it stayed here, hung in there, and then as soon as it dropped out, this drop was just fascinating to watch. Yeah, we could let's go over a couple names out of today that maybe you want to keep an eye on at the least. Hold on, what did I do? Let me get to other charts here. I could pull up some dailies. All right, because initially the flow was abysmal, but then it wasn't as awful. Could have been a lot worse. At least there were some names to watch out of it. All right, so we have the flow's been bad. I mean, I'm not sugarcoating it, trust me, but at least there's some names to watch out of it. First off, I know a couple of you were still in it, which I didn't know, which is great. The PLNT, nice squeeze, that Planet Fitness. And you see the difference. They came back for this name, right? It wasn't one sweep and you never saw them again. Today, got hit again in the morning. So it caught like 3-4 sweeps for a name like that. That's significant. So a nice squeeze here. Who knows how much more it's got left, but already a nice squeeze. What was another name that I wanted to talk about that moved already? Anyway, a couple of the names from today. You had Yelp, which was strictly spec weekly, cheap weekly sweeps. They came in off the open, had a nice little pop initially. Then the market faded. It faded some with it, still held green, held up well, and then closed strong. It looked like there was some profit taking into the bell. Maybe they rolled. We'll see an open interest tomorrow if you're still in it. All right, but strictly weekly, cheap weekly spec stuff. Dish, I'm not a big fan of this name, but you know, the action's the action. They came in buying, building a December call position, got hit a couple times. Nothing huge for Dish. But again, in this type of flow that we're seeing right now, you know, you may want to keep an eye on it if you have an interest in the name. You know, you see the pull here and trying to find a bottom. So definitely could have upside if they start buying it aggressively. Those were December calls. What was the other name? Oh, UPS caught some action. Again, nothing huge, but some action. Let me get the list here. You guys can see the bets quick. Oops. The energy ETFs I didn't even include on there because, oh, shoot. Hold on a second. I think I attached it to this. Let's see. Oh, good, because I only had the trophy there. All right, so here's the action. Dish, there's the action there. They hit it quite a few times. Yeah, decent looking orders. But me personally, you know, they're going to have to convince me to buy that thing. UPS, nothing huge, but worth keeping an eye on if you have interest in. UPS is good looking. There's nothing wrong with it. All right, but it may linger here if the market doesn't go anywhere. That's the thing to remember with all this stuff, guys. Okay, just because it's catching activity with time doesn't mean if the market goes south that these things are just going to buck the trend and go higher. They're not. You know, you got Roku and Shop, and that's it. Not everything is like that. The majority of names are going to go up and down with the volatility in the market. All right, so I do this every day when there's action. Sometimes I have no top bet list in corrections, but for at least you guys to keep an eye on further action in the name, keep an eye on the price action, hit Tim up in the room for some technicals, levels to look at. That's the stuff to do when you're not being a degenerate and looking to put a bet on something. You know, that's the stuff you need to do. Clack, this is repeat buying, but look at this stock. What? Why is this semiconductor look so much better than everyone else? Right? This is a good looking semi. Look at this. There's got to be something there that they're doing that's putting them above everybody else. So you got, this is technically repeat activity. For me, not the best spot. You know, I like to buy things off pulls. But yeah, this thing, there's no sellers. I'll tell you that much. So again, work your magic, technicals, all that stuff if you're looking for a dip. But Clack, there was a repeat buy. That's a $200,000 sweep, even though small lot. Yelp, and the repeat bets today on the bullish side. Gold miners, if you want a list of the top gold miners flow-wise, let me know. There's about 5 names that they just keep hitting over and over and over again. PAAS is probably right up there with the best of them, if not the best action-wise. Oops. All right, you can see this thing. SSRM, really nice initial activity, this SSRM. I don't know if you guys remember it. You could search it either in the room or on even my personal Twitter. I posted it when it went off. You have WPM. This is the old silver Wheaton, but I'm hearing it's not silver anymore. It's gold. You guys remember SLW? This is the old SLW. All right. And the reason why I'm even telling you guys, if you want to list, you don't have to chase 3 days up like this. But when they pull off a niner or they have a breather and you guys still like to set up in minors, right? We're not seeing flow anywhere else and the minors still can do their thing. That's where you want to look for, where you want to look at these things for trades. You know, on pullbacks, on dips, you see even, you know, these things sell off 2 days, they bring them right back. There are no sellers in these things right now. None. Zilch. If you're looking for cheapies, there was a really good looking sweep in this Umana not too long ago, and they bought some more today. AUY. All right. There's probably a couple others, but if anybody needs a list and I'll like put them in a ranking for you, let me know. But they've been hitting them for a while. All right. And the big ones, you got Newmont NEM has seen some real nice action. This is a big one. And this one's big, gold, which is Barrick, the old ABX. Look at this animal. I don't play gold miners. I don't know. I just need my head examined. I need my head examined. But they all look strong, not a seller. Yeah, I got PVG nightmares. You're right, C-Train. You're right. I'm not gonna lie, you're right. Oh yeah, Spot. Good call, Tim. Spot saw a little bit of buying today. Maybe worth keeping an eye on, again, for further action. Nice pull. You know, keep an eye on that. October's, they hit a couple times. Nothing huge, but worth eyeing. All right. And as far as names that they've been, like I said, I don't have any, right? I told you guys about the Sony. That's been one of the few. It's not even my type of setup. This is repeat activity. And, you know, it's up at the highest point it's been off the action. But this is a name they continue to come back to on dips. You guys know that Animal ENPH. Again, this is not off a pull. You know, so even off a pull at this point, what the hell am I going to do with this thing? You know, as far as buying names that have corrected and they keep coming back for, I have nothing. Zero. All right, but here you go. Here are some names today. Okay, if they come back for them, these would be candidates, right? So like, for example, you know, UPS doesn't have much time behind it though. But let's say a Dish, all right? Let's say a Dish was a name you liked, okay? The more it sits here and does nothing, and the more they keep coming to hit December calls, okay, the more bullish the setup becomes. Okay, they're buying December not for a move today or next week. They're buying it knowing that the likelihood is they're going to be early. And if they keep coming back, they're building a position in it, right? Again, all those names that we saw in other pullbacks. QSR, this was the biggest dog. It happened to be Ackman. Sharpies, that's how they buy. You know, catch missile and risk reversals and all this shit down here. And the stock did nothing. Look. And at the time, what were they buying? Aprils they were, Mays. So out here they were buying. Okay, so they weren't looking for any short-term move, and they kept adding and adding and adding and adding. Now look at this thing. You know, so that's the stuff we want to see eventually out of here. We should, I hope. Unless, you know, the flow just explodes off something and starts up that way. What else? Tim, you got any other names you're eyeing off the action? Oh, yeah, on the bearish side, you know, these rollover trades for intraday especially, I mean, they've been telling. We wanted the TQQQ to get hit. SQQQ got hit this morning. You know, that's not a bullish sign. So, for day trading purposes, there's a lot of signals of aggressive put activity. But, Tim, I know you do, and you do it well, and some of you do it. I can't promote swing position trades off bearish activity. I can't do it. I can't do it. Too many newbies out there are going to get destroyed, and I'm not playing a part in that. I'm not playing a part in that, especially if they're looking to short and not buy puts, where at least you can manage your risk by buying puts, right? You could only lose what you put in. But yeah, exactly, Tim. That's what I mean. I rather, if you're bearish, you stay in cash, fool around intraday, guys. There's money to be made intraday on the short side in these climates. If you had the discipline to just stick with that, these rollover trades, right? Green to red, put sweepers, grab the bull, that type of thing. But again, I'm going to put the disclaimer and warning, be careful, because that's how they lure these bears in. They give them a taste, and then when the tide turns, they have that taste in their mouth and they want it. That's my only disclaimer and warning. But yeah, we're due for some Neil Diamond action, right? DIA. So we're due for somebody to stick out their neck on the bullish side and say we're ready. That's what we're due for. And hopefully it comes sooner than later. Yeah, TLT has been crazy action. We saw a risk reversal in the stock up here somewhere. And then today they were selling November puts. And there's been put buying in it, but it's going to be tough to call tops in these things. We don't know what those puts mean, We don't know what the hell those puts mean. Yeah, but that's what I'm saying, Tim. Risk reversals, there's nothing better, right? When you get a risk reversal off a pull in a name, it's gold. It's gold. And you don't see a lot of those unless you're coming out of a correction. You don't see those every day like sweeps. So we haven't seen any risk reversals. Have there been any in individual names at all, Tim? Any risk reversals at all? Yeah, exactly. None of that action. Nothing. And you can't blame them though, guys, right? Can you blame them? We're over here like, oh, come on, somebody go in, step in big, stick out there. How the hell can you blame them right now? Nobody knows what the hell's going on right now. Nobody knows. That's why it's going to be telling when we actually see it. Yeah, Microsoft, these names, I've continued to catch them. Microsoft had a nice sweep today, but it looked like it rolled. But these are the names that we're seeing put selling and the risk reversal type action, off this uptrend. But we want to see new names off the pull. Yeah, they've done well with those things, Tim. They've done them well. All right, guys, go enjoy your evening. Remain patient. You have my opinion, the playbook right now. If you want to keep it simple, stay disciplined, and stay ready at the same time, right? That's the playbook. And then until we get some signs out of flow and intermediate term signals, we're waiting on that. But it gets here before you know it. So keep your chin up. Be good, guys. Thanks for stopping by. I appreciate it. Good luck the rest of the week.